Hi, this is Vince again. Today I'm going to be talking about the analysis of risk um, and how I evaluated my risk in my investments and my life. I think we got to start out about life. There's three risks that you take. I think maybe there are more, but I'm just going to focus on three because that seems like a number that everybody uses. The first one you could say is the risk to your life, like food, shelter, all those kind of things, energy, and you need to position yourself in a way that you're in at least amount of risk that's possible. That's the thing with risk. We can't eliminate it. We can only mitigate it. In other words, analyze it and make it as small as possible. So life is having enough food, uh, housing, and energy. So it's where you live, actually. What's the cost of living? Can you get to a place where you can grow your own food, have your own animals if you're not a vegan, and those kind of things, and maybe generate your own power, of course, too. So those things are doable, actually. The next thing is your health. Now, you can live in the nicest place and all that stuff and make all the money you want, but if you're not healthy, then you'll spend all your money and lose all your possessions trying to get that back. So it really is after you've secured your basic needs, then it's like being able to make sure that you can hold on to them. Uh, Maybe they're kind of interacting, but okay. And the third thing is your financial uh, health or freedom. You know, the health and the life thing happens when you have enough money to actually do something about it and mitigate those risks. So, what I'm going to deal with in this video is the financial part of it. I do the other stuff in my program the other way in a preparation for your financial freedom and how to evaluate those risks and what your goals would be after, well, right now, and then where you're going to go after you get financially free. So, financially, the one thing that probably is the best is owning a business or having shares in a business, a private business. You own 51% of it or something like that, but you don't run it. The guy has 49% runs it, but you have control. That's better than actually being the only owner because then you have to put all the work in. And to mitigate that risk, if you've got to be well researched and all that stuff, but still, you got a 40 to 5%, 5 to 40% chance of actually making it, as per statistics. That depends on what niche you're in, and you know, by niche I mean market. That it might go a little higher, a little lower. Restaurants, 5 to 10% make it. So uh, then, as far as being in somebody, have somebody else run it for you. That's a lot more successful, and it's a lot less input for you. Because if you're in your own business, 68, 100 hours a week, and it never quits. Never quits. For most people. Some people can set it up. Yeah, I'm not saying you can't do it. Uh, and then the next thing is uh, real estate. So that's really good. I mean, you just use other people's money. Oops, there's no financial freedom in that. Same with the business. You're using other people's money. And you can set yourself up so that you are taking advantage of it and uh, you're not so much in control. But that's one of the things about this whole investing thing is using other people's money, which isn't the best because it doesn't give you freedom. You got to do things the way they want you to. But you get into real estate and up front, it's a lot of work finding properties, a lot of work rehabbing them, a lot of work maintaining them, and it's just a great big hassle. It's illiquid. You can't sell it tomorrow. Probably sell it next week in some markets. Could sell it in a very quickly if you take a 20, 30, 40% hit, and that might happen, has happened before. But a lot of times it's like sell it, get out, get your cash, and then move on. Don't hold on. Big thing with investing. Everybody holds on too long. So the the other thing about uh, real estate is the cash flow. Is that when I tried to do it, actually, it was like $100 a month per unit, per house, per whatever. And I was going $100 per month, and I had to invest over $100,000 to get $100 a month. And yeah, that's 1,200 a year on 100,000. Well, that's just a little over 1%. And I'm going, this doesn't make sense. So you need 10 houses or an eightplex plus a duplex to make $1,000 a month. Is it worth it? That many? Wow. And besides, if something goes wrong, you can't get out. The bank will take them all. Okay, and that's what happens to change in conditions, the vacancy, the maintenance, all that has to do with it too. And a lot of people just can't handle it. They don't want anything to do with it. The good thing about it is that it probably, you know, could survive an extreme downturn. If you're in a good position, you just hold on, hang on, because as the economy gets worse, more people want to rent. So, you, the worse it gets, the fuller you should be. Um, so that's a good thing. The next thing is any kind of investment where you give your money to a brokerage or a platform. Brokerage means like US dollar type thing, stocks type thing. And you give your money to them, and then they trade it for you, or you give it to them and you trade it. But you're giving it to them, so they go bankrupt. They'll just, your money will disappear. You don't have any left. That's especially true in crypto. There's thousands, tens of thousands of platforms that say they trade crypto for you and make 1, 2, 3, 4% plus a day, and then you get paid in your wallet that is in their program. So you have to manually get it out at their whim too. If they don't allow you, then you're stuck. And so that's one of the biggest scams out there is that they're paying you 1% a day, they keep it, and then you got to beg for your money back. Um, so there's the downside. There's the risk with any kind of investing. The other part of it is, let's say that you want to get financially independent, $1 million, $2 million, you know, and you want to put this someplace where you can make some money on it. Not 1% a day, maybe, but 10, 12, 15% a year. The thing is, you're still going to have to invest it someplace, and you're going to have to give your money someplace, or you're going to go into real estate, and then you're going to have to. The way to do it, you don't buy anything outright. You get a loan on it, so you're back to the whole thing. So really, what's left? The government, save 401ks, etc. Yeah, but if the government doesn't like it anymore, they'll just take your money, tax you on it, whatever. You know, uh, what's the other one where you pay the tax up front and then you get a tax free at the end, so long as they keep the laws the same. And the other thing is Social Security, which is pretty secure until 2035, and then it probably will go away. So if you're going to live 15 years or more, like you're 65 now, you're only going to be 80 then, and it could go away. Besides, it's not enough to live on. You know, 1,100 to $2,200 maybe. I think that's the range. Maybe it's a little higher. I'm sure it's lower. That's not enough to live, but it's a supplemental thing, and it's kind of a, you know, kind of a guaranteed thing, but can all go away. And so I evaluated my financial freedom vehicle. I call it a vehicle, and I did the same things. Um, it's totally done online. I can spend 2 hours a month on it, so no hassle. All the returns are put in a wallet, and I can do with it what I want. It doesn't stay on the platform. They don't keep my money, and then I can do what I want. The risk is that what kind of business is it? Well, it's a business that uh, utilizes the same thing that businesses have always utilized since they ever started. It's absolutely necessary to have it. And so, so long as business keeps going, the my business, it's not mine, but the business, the niche I'm in, will keep going. The other thing is the internet shuts down. Yep, done. But the internet shuts down. We're back at 1900 because nothing's going to work. The only other thing is the next thing is are you flexible and can adapt enough to use ways to, change it? Or one of the big things is getting in and getting out. So what I talked about before. Said sometimes you put your money in, but you can't get your money out. It's happening in banks now. They don't want you to get your money out. So um, that has to be flexible. They got to be up with the terms and the markets and everything else and what's happening. And they have already said they addressed it. So they know more than I do about that. Well, they should. I've been in it for 30 years, so I might be close. And so I evaluated those risks, and it was like, wow, real estate, own business, stocks, bonds, crypto, you know, 401k, not even close. Compared to them, this is no risk at all, unless the total world blows up, and then I don't care because I'm not here. And so I just said, yeah, this works. And I want to say one more thing about crypto because I've been in it for so long. Crypto was originally meant for its utility to be able to uh, transfer money, currency, or whatever you want to call it, between two people very quickly without any hassle. You own your own whatever in your own you own your own Bitcoin in your wallet, and if you want to send it to somebody, you can, and nobody can tell you what to do with it. That's the whole thing. And then it got into like contracts, data storage, and all those kind of things. And then, of course, then it went also into security, so nobody can break in. That's what it's meant for. It's not made to trade. They corrupted it that way, and that's why it's so volatile. It's not meant for that. So it comes down to the hassle factor. I went through it all the time. Spend 2 hours a month, more or less. I spend more time documenting what I'm doing than actually doing it, and that means I'm free. If you have a business, you're not free. I don't care if you've got $1 million in the bank and you still run a business. You're not free. So don't come to me and say, "Oh, I'm financially free." No, you're not. You're financially independent, but you're still tied. Even if you didn't need to run your business, you could close it down. You still won't because you're not free. You're not free up here, and you have your investments in some brokerage or some crypto thing or in some real estate. That doesn't make you free. So, something to think about. Analyze the risk. what's the return on investment too? Thanks.